let's talk about Bitcoin's 4-year halving cycle may be dead. The latest moves in crypto market in context for April 13th, 2022. So this was released today at 9:34 a.m. We have been talking about this for a while on this channel. Is the 4-year halving cycle dead? It's also referred to as the super cycle. Essentially, what is the super cycle? Maybe they'll cover it in the article, but I can cover it for you guys here. What happens is you have a halving for Bitcoin every 4 years. After the halving, the price of Bitcoin goes up. Why does the price of Bitcoin go up? Well, the price of Bitcoin goes up because the newly minted Bitcoin that gets paid out to miners is reduced in half. You basically have two ways that miners make money on Bitcoin. One is going to be transaction fees, and the other is, of course, the minting process for the new Bitcoin. Now, Bitcoin does have an ultimate supply cap, and because of the halving, etc., that won't end until around the year 2140. So from an investment standpoint into mining, Bitcoin does have almost the most guaranteed extension of basically mining. Of course, you have to deal with the ASICs and the availability of those ASICs, etc. Now, when Bitcoin goes up due to the halving, the other thing that happens is the rest of the market goes up too. Why is this? Well, that's because traditionally in the past, you had basically all of the other cryptocurrencies, altcoins, shitcoins, they're all coupled with Bitcoin in some way because they were paired together. It's becoming less and less common. You can basically directly exchange into a lot of the bigger cryptocurrencies like Ethereum, so on. Interoperability is also changing this too, but for the most part, everything kind of follows Bitcoin. So that's why the markets kind of just always end up following the Bitcoin super cycle based around the halving. Now, after the halving and about a 2-year pump up somewhere around there after the halving, you end up having basically a bear market. So you have a bull run right after the halving, and then you have a bear market for 2 years. As we've been talking about, this bear market that we would traditionally expect to be around now doesn't seem to be coming to fruition, at least to the extent that it used to. Why do we say this? Well, previously what you would see is the price of Bitcoin go up and then come back down to the previous super cycle's all-time high. The previous super cycle's all-time high in this particular case would be 21,000. We have not gone back down to 21,000 in the expected time frame, as we should be dipping down closer and closer to that. However, we are stuck at a weird sideways stalemate in price. Does it matter as much? I don't know. But markets are up today, right? Bitcoin crashed below 40,000 yesterday and is back over 41,000. I am not a trade analysis guy, nor do I really actually research much in trade analysis. So, not financial advice. This is kind of where we're at though. So they say, good morning and welcome to First Mover, our daily newsletter, putting the latest moves in crypto markets into context. Here's what's happening this morning. Market moves. Bitcoin steady as race among central banks to hike interest rates heats up. And then Bitcoin's halving induced a 4-year cycle may be dead. This is kind of what I was looking for. Let's see if we can find it. Okay. Is that right here? Yeah. So Bitcoin continued to trade sideways at around $40,000 as the dollar index resumed the uptrend and the race among central banks to hike interest rates intensified. The Reserve Bank of New Zealand raised the benchmark rate by 50 basis points to 1.5% during the Asian trading hours, delivering its 4th hike in a row. The case for a 50 basis points interest rate hike from the U.S. Federal Reserve next month has strengthened in the wake of Tuesday's hotter than expected inflation release. I believe we're at 8.5% for clarification on that. Highest in 40 years. The Bank of Canada is also due for a similar oversized move later this week, while the European Central Bank is expected to raise borrowing costs 4 times within a year, according to Bloomberg. With so much tightening in the pipeline, the path of least resistance for risk assets, including cryptocurrencies, appears to be on the downside. Bitcoin and Ether options markets are seeing renewed put bias. A put option gives protection against bearish moves. From a technical analysis point of view, Bitcoin looks weak with the averages and the exponential moving average EMA ribbon converging for an eventual bearish signal similar to the one produced before the early December slide. The cryptocurrency's inability to chart gains following Tuesday's weaker than expected core inflation data may be a cause for concern for the bulls. Expert has called the core consumption price index CPI data bullish. And actually, if we look at it, we can already see Bitcoin recovering. So maybe they reported on this a little too early. And this isn't what I wanted to talk about. So I thought I had this story pulled up. So let me go ahead and try to search their site for this. Give me a sec. Well, I guess I'm confused on how this particular website functions. They're saying it's over, but there's no points. There's a featured story here, but no. Oh, here we go. Got it. Okay, just got to scroll down further. This is the one we want. Bitcoin's halving-induced 4-year cycle might be dead. Amid the Fed-induced gloom and doom, some investors are betting that history will repeat itself with animal spirits returning to the Bitcoin market in the lead up to following the mining reward halving due in less than 2 years. However, observers suggest otherwise. Bitcoin at $43,000 is pricey for a halving that's 2 years away. Its simple fundamentals let the price sink for a while. End quote. One market participant tweeted earlier this month, while another Twitter handle expressed excitement after noting Bitcoin's record of charting meteoric rallies after reward halving. To the uninitiated, Bitcoin's mining reward halving is a program code to reduce the pace of supply expansion by 50% every 4 years. Essentially, the cryptocurrency's monetary policy is on a preset tightening path, contradictory to the ever-increasing fiat money supply. That's one of the main reasons the crypto community considers Bitcoin a digital gold and an alternative to the US dollar. The impending halving in 2024 will reduce the per block reward from 6.25 Bitcoin to 3.125 Bitcoin. That's a huge cut too. This one seems like a big one to me. I don't know. Historically, the halving cycle has comprised a 2-year recovery rally ahead of the event, followed by a year-long meteoric run in a 12-month bear market. If the past is a guide, 2021 was supposed to be a bullish year like 2017. Bears are to control price action this year, paving the way for recovery rally next year and a bull run after the 2024 halving. However, the bull cycle is unlikely to repeat itself, according to Katie Talati, something like that, director of research at Arca. Quote, there are a couple of reasons. The first is that the power of miners has diminished greatly since the last halving, end quote. Talati told CoinDesk in a Zoom call. Quote, there is just so little Bitcoin being released right now. Back in 2018, the narrative was much more driven by miner influence, and that's not the case anymore, end quote. I kind of disagree, but let's continue. Glassnode data shows the 30-day average of the number of Bitcoin minted currently stands at 900 BTC. No, we're not going to continue. I'm going to tell you why I don't think that's the case. Okay? All right? And remember, we do all of this live. What they're trying to say is that the mining influence isn't as high. What you have to take into consideration now, especially since we have seen the move from China over to the United States, is that we have institutional investments, we have statewide utility companies getting in, we have much larger infrastructure and investment into infrastructure for mining Bitcoin that we have now seen essentially what is breaking the mold of hash rate increasing regardless of price of Bitcoin. And typically in the past, what we have seen is, of course, the miners essentially going ahead and moving the hash rate up with the price. What does this mean? This means that miners are influencing the network just in a different way, because basically now you have a lot more money coming into it and a lot more people competing over hash rate, and the hash rate is exponentially growing. it basically means that there's a lot more trust in Bitcoin moving forward. There's a lot more security, there's a lot more trust, and therefore, of course, people are willing to compete for lower and lower rewards of Bitcoin as we move forward, and this will get exponentially worse over time, even through the next halving, right? People are going to continue to buy $10,000 miners for less and less return on investment, right? Less and less revenue. We already see a $10,000 miner is only giving you something like $13 to $15 a day, and that was never the case before. However, the bull cycle is unlikely to repeat itself, blah, blah, blah. We got there. Glassnode data shows the 30-day average of the number of Bitcoin minted currently stands at 900 Bitcoin, worth $35 million US. That's just 0.14% of Bitcoin's 24-hour trading volume of $24.7 billion. The average stood at over 12,000 BTC 10 years ago, above 4,000 BTC between 2013 and 2016, and above 2,000 Bitcoin before 2020. Besides, with the availability of miner financing facilities, miners no longer need to sell their rewards or coins received for validating transactions on the blockchain to fund their operations, as was the trend in the early days. And that's a good point too, because essentially, especially with DeFi coming into play and the way people can basically put up their cryptocurrency, their Bitcoin that they've mined as collateral to then get more fiat currency to then increase the size of their farms, they're a lot less likely to sell. In my particular case, I'm a little too small to like put up a ton of collateral in cryptocurrency because I'm kind of like in the survival mode. But that being said, it does make a lot of sense here. Quote, the 2021 migration of hash rate to North America accelerated this by change of improving miners' access to sophisticated financing options. And this is what we talked about just a second ago. The growing number of listed Bitcoin mining companies has further boosted access to capital markets, end quote. CoinDesk's sister company Genesis Global Trading said in a daily newsletter dated December 27th. Quote, with greater funding availability, miners no longer need to sell Bitcoin to fund operations and expansion. This reduces the selling pressure in the market. So I kind of get their point. That makes sense. Miner influence is still a thing, but because of the way you are able to get financing and the move to North America, you're not seeing the selling pressure, which means the miners are not influencing the price as much because they're willing to take a lower price on the collateral in expectation of Bitcoin going up in price later on down the road. The place where you get in trouble if you are one of these people participating in kind of the alternative financing world surrounding cryptocurrency is if you have a huge dip in Bitcoin and you borrowed against it at 41,000, it really does go back to 21,000, you're going to be in a lot of trouble, right? You'll get liquidated. All of these factors have made miner flows irrelevant to the market. More importantly, the demand side is strengthened with the entry of institutions and macro traders after the March 2020 crash. Quote, there is so much more demand from the traditional world and institutional investors accessing the market that you are just not going to have, like bottoming out of Bitcoin in 2014 and 2018, Arcus Talati noted. Big firms from traditional markets are hiring crypto talent, ignoring the dour price action. That's in stark contrast in previous bear markets when people left crypto jobs and moved to traditional finance. Golden Tree Asset Management, a New York-based firm with $45 billion under management that added Bitcoin to its balance sheet last year, recently hired Block Tower Capital's co-portfolio manager, Avi Fellman, as its new head of digital asset trading. That's a positive sign. Quote, today I am seeing really smart people getting involved despite the bear run, end quote, Talati said. Talati, something like that. Quote, to me, I just don't feel like we're ever going to see that 4-year cycle again, end quote, she quipped. That does not necessarily mean crypto there won't be a Bitcoin bull run and a halving is irrelevant. It's just that crypto market has matured with several factors influencing valuations, as is the case with traditional markets. So the 4-year halving focused cycle offering easy money is perhaps dead. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.